This is Horizon's Middle East and Africa, our top stories this morning. Doing deals. As Donald Trump's July 9th tariff deadline ticks closer, the EU is now reportedly willing to accept his 10% universal levy. But the US president's threatening to impose a fresh tariff level on Japan over rice exports. Washington-bound, Israeli Prime Minister Benjamin Netanyahu is expected to meet with Donald Trump next week as the US continues to press for an end to the war in Gaza. And Trump signs an executive order terminating US sanctions on Syria, a move that could unlock investments in a country reeling from 13 years of civil war. Those are your headlines this morning. It's just gone 8 a.m. across the Emirates. Welcome to the programme. I'm Lizzie Burden in Dubai in for Germana Bersetchi. A very good morning. It is now July. It is now the third quarter. And we've got the scores on the doors for how things went in Q2. The S&P ended Q2 hitting a fresh record. And indeed, it was the best quarter since December 2023. April, what April, you might ask yourself. But we've got futures pointing not very far this morning. We're pretty flat on both sides of the Atlantic. Do bear in mind, though, that these are probably going to be light volumes given that it is a shortened holiday week. And speaking of which, just flip the board over to the cross-asset picture. You've got bonds braced for gains as we look ahead to that jobs report. It's brought forward, of course, because of the Independence Day holiday on Friday. At the moment, the 10-year yield at 4.21. But if you have yields dropping, that could benefit gold. So at the moment, we're at $3,320 a troy ounce. This today is the second day of gains for gold because of the Fed cut optimism. Meanwhile, we're looking at Brent at $66 a barrel. Of course, the geopolitical tensions somewhat dissipating in this region, the Middle East, and now that means traders can look ahead to that OPEC Plus meeting on Sunday. We're expecting potentially another supply hike. Euro-dollars at 1.17. We're going to look ahead later in the programme to that Eurozone CPI print at 10 a.m. London time. But let's just flip the board one more time and dive into the currency space because we've got the scores on the doors, as I say now, for the first half. And indeed, look at how the dollar performed. It was its worst first half plunge on record. For as long as the Bloomberg Dollar Spot Index goes back, you can see it was bad by some margin, down 9.1%. So is that going to continue as the Fed cut bets pile on? We'll keep an eye on that throughout this half of the year, I'm sure. But let's check in now on how markets in Asia are faring. Avril Hong's on standby for us in our Singapore studio. Avril, you've got President Trump saying that he's sending Japan a tariff letter. What's the mood music in Asian markets?
I mean, Lizzie, it's a tariff letter, not a love letter, right? So we're seeing a somber mood emerging in Japan. Equities, they've come off a winning streak, about 1% lower. And there does seem to be a sort of gulf between US and Japanese trade negotiators when it comes to autos as well as rice. It's interesting, though, on a day like that, we also got the BOJ's Tankan report, which indicated a pickup in business sentiment among large manufacturers, even amid the tariff uncertainty. So maybe pointing to some signs of resilience. We are seeing the firmness creeping in also on the Japanese yen today. Now, aside from that, the mood music looks pretty positive. Look at South Korea and Taiwan, and these markets are helping the region's benchmark to potentially close at the highest level since September 2021, after already a quarter in which they climbed, these Asia stocks, about 12%. So really, this optimism on progress towards trade deals in the Asia-Pacific as well, Lizzie.
OK, Avril Hong in Singapore, we thank you. Maybe you can write me a love letter, that'd be nice. But let's get back to the trade story. As President Trump is threatening to ramp up those tariffs, as Avril mentioned, on Japan, his top economic advisor, Kevin Hassett, says that the White House still does aim to finalise deals with other partners after the July 4th holiday. Our Bloomberg editor, John Herskovitz, joins us now for more. John, we've got the EU trade chief, Maroš Šefčovič, leading a delegation over to Washington this week. What do we know about the sort of terms that Brussels is now willing to accept, perhaps?
Sure. The EU is perhaps looking towards an interim deal, which would keep the universal 10% tariffs in place, but it would also seek exemptions for things, some sectors like pharmaceuticals, alcohol, and also try to reduce the sectoral tariffs on autos and steel, get these levels down. So it's seeing that this may be a little bit detrimental to the EU, but it also could be something that's workable. And this would help the talks move ahead and perhaps get something done this week before the deadline on July 9th.
And John, we also had an interview with the Treasury Secretary Scott Bessent here on Bloomberg. Let's just take a listen to what he's had to say on Fed cuts.
Fed's now looking at their feet. We have seen no inflation from tariffs. If we do, which we don't have to, then there'd be a one-time price adjustment. Nothing is more transitory than that. So, Team Transitory, having failed the American people in 22, they seem a little frozen at the wheel here.
John, you were listening to that conversation in full for us. Did he drop any hints on who the next Fed chair might be and when Donald Trump will announce them?
Yeah, there were a couple of things that were interesting. He proposed kind of two, or it indicated two possibilities. One is that there'll be an internal replacement, perhaps Waller. The other is that there could be a new face appointed in January, and this person would take over in 2026. So we have these things kind of inferred. Of course, with the Fed, it's really difficult to find out who's going to be going when and where, but we did have some indications that perhaps internal and perhaps a new face for 2026.
OK, John, we thank you so much for that latest on US politics. John Hershkovich, we thank you for making time. Now, let's get the view on how markets are digesting all of this. I'm joined now by Mehvish Ayub, who is Head of Managed Solutions Advisory Dubai at Bank of Singapore. Lovely to have you with me here on set. I've just been looking through your market view. It's interesting. You're neutral on US equities. You're overweight Europe and Asia, I should say, ex-Japan. We've just had a booming June for Wall Street, though. So why are you a bit more sceptical when it comes to US stocks?
Good morning, and thank you for having me on. So I think when we take a step back and look at the volatility in terms of US policy that we've seen year to date, it looks to me like the markets are pricing in a very rosy scenario. So there's certainly a perception of a dovish Fed. There is the relief rally that we had last week in response to, thankfully, the calming of tensions in the Middle East. And there has actually been, good earnings out of the US. But what we're really calling for is having a well-diversified portfolio. So still have your allocation to US equities, but we're not as overweight as what we were throughout 2024.
Well, where you said perceptions of a dovish Fed, you've got Goldman now calling for a September cut, projecting that because it thinks that the tariff impact on inflation will be a bit smaller than expected. Do you not see a September cut?
Not necessarily. So at the moment, our Chief Investment Office is actually only calling for one rate cut by year end. No one knows, right? No one knows. And this is actually, the million-dollar question. But the point is that most economists, when they look at the data, are all talking about July being the earliest before we can actually see the pass-through of tariffs coming through into the inflation data. And that's exactly what Chair Powell said in his testimony to Congress as well, that we have to wait for June and July data. So I think it pays to be patient, because if those inflation numbers do come through, it's not definitive, but if they do come through, that does have quite strong implications compared to what the market is pricing in right now, which is just over 2 and a bit of rate cuts by year end.
But given your view on US stocks, is that because you see a US recession?
Not necessarily, but we are calling for stagflation. I think, unfortunately, the highest inflation that we're going to see in OECD countries is likely to be in the US, given their view on tariffs and how that policy has been communicated to markets.
We just heard the interview with Scott Bessent, and there's been so much speculation about when the president's going to name a Fed chair, right? Whether or not this new Fed chair is on the FOMC already or not, do you think that they're going to undermine Jerome Powell?
So I think when we take a step back, I really do think that this is what we're going to continue to see over the next couple of years is this fight between the US administration and the strength of the institutions in the US. I think, what I take away from all of this is these consistent attacks, actually, on an independent institution like the Fed. And the fact that President Trump can say that, well, I'm trying to pressurize the Fed to cutting rates earlier than what they see is feasible.
Oh, so you don't think that Trump would eliminate his punch bag then?
No, not necessarily. But I just think that, when we think about the situation, it's much more political in nature than it is economic. And even the perception of the Fed being dovish right now is from those two governors that President Trump has, officially sort of put forward as replacements for Chair Powell. So they're essentially auditioning for the role.
Yeah.
So I think when we actually look at the numbers, when we actually look at the data, yes, the US labour market is strong. We'll see what happens on Thursday with regards to payrolls. But I do think we have to be patient and see what data comes out.
But what does the perception of the Fed as political do to markets, do to yields?
So, again, I think you have to take a view where you believe inflation is going. So I think the market is going to be very reactive to data and commentary from the Fed and other officials in the US administration. But it really is a case of what does data show? Are you expecting that growth is going to be the main driver of where rates go, or do you expect inflation to be? At the moment, we're sitting with the Fed that it really is all about inflation. And they very clearly have stated, and they've been consistent in their messaging, that they are continuing to focus on inflation.
Just on this argument for diversification, I know that you're also kind of pro-Europe. How much further is there to go when it comes to European assets? How much more upside is there? And I'm sure we'll have Christine Lagarde in Sintra today plugging the euro once again. Do you think that euro-dollar could go all the way to 120?
So that's not our core view right now, but I really think we need to think about the structural changes that are occurring right now. This flight out of US assets in the direction of the dollar is really astonishing. It's not what anyone expected at the beginning of this year. And the reason I say this is because I've been in foreign exchange. I started off my career in foreign exchange trading for over 20 years, and I cannot believe that interest rate differentials are not driving currency markets right now. So there must be something bigger at play, and structurally we do believe that flight away, not necessarily entirely out, but away from US assets into other regions is going to continue for the foreseeable future.
Well, Mehvish, it's great to draw on your experience this morning. Thank you so much for stopping by. Mehvish Ayub, who is Head of Managed Solutions Advisory Dubai at Bank of Singapore. Thank you. Good to have you with me. Well, let's get you up to date as well on the latest in tech news this morning. Apple closed up over 2% after Bloomberg revealed that it's considering using technology from Anthropic or OpenAI to power a new version of Siri. That would sideline its own in-house models in a potentially blockbuster move aimed at turning around its own flailing AI effort. The iPhone maker is struggling to compete in generative AI, the most important new technology in decades. And elsewhere in big tech, Meta CEO Mark Zuckerberg announced a major restructuring of his firm's AI group that includes a new series of hires. Meta's AI efforts will now fall under a new group called Meta Superintelligence Labs. Superintelligence refers to systems that can do tasks as well as, or even better than humans. Alexander Wang, as well, former CEO of startup Scale AI, will lead the new Meta group, according to the internal memo. Wang will serve as Chief AI Officer. Those are some of our top stories out of tech. Next up, though, as Benjamin Netanyahu is set to meet President Trump at the White House on July 7th, we're going to bring you the latest on Middle East geopolitics coming up shortly on Horizons. Welcome back to Horizons Middle East and Africa. I'm Lizzie Verdon in Dubai. Now, as the US urges Israel to end its war on Gaza, Prime Minister Benjamin Netanyahu is expected to meet President Trump at the White House early next week. Joining me now for more is Paul Wallace, Bloomberg's Managing Editor for Economics and Government here in the Middle East and Africa. Paul, nice to see you. Let's start, though, with this visit of Netanyahu's to Washington. We're looking ahead to what could come out of it. He says, we've also heard from Israel's opposition leader yesterday calling for an end to the war in Gaza. he says that's also the position of the army. Do you think that we could see an end to hostilities soon on the heels of the Iran ceasefire?
It's definitely possible. And I think, world attention did obviously shift away from Gaza to a large extent while the Israel-Iran war was going on, and now it will come back. And that's also within Israel. I think now the hostilities with Iran are over, that there's a ceasefire in place that seems to be holding. Israelis are back to, focusing mainly on Gaza. And I think the country as a whole does want the war to be over. Of course, they want a deal that enables all the hostages, both the ones that are still living and those that are dead, to be released. That's still a big hurdle, and it's unclear if Hamas and Israel are going to be able to bridge their gaps. There's been the rough guidelines of a deal have been in place for a while. It would be a 60-day truce with some of the hostages being released and then negotiations starting for a permanent peace. But Israel is still intent on destroying Hamas and making sure it has no part whatsoever in the running of the territory afterwards and seeing its total disarmament. That is still a big sticking point, so there's no guarantee we'll get an end to the war anytime soon.
Yeah, so it's hard to kind of marry the two perspectives. Meanwhile, you've had Israel actually expressing openness to peace with Syria because President Trump's been signing this executive order regarding easing Syria sanctions. Do you think that Israel's just changing its tune because of pressure from Donald Trump here to make friends in the region?
I think there is an element of that, because from Donald Trump's viewpoint, he obviously wants to be seen as this peacemaker. He wants to stabilize the Middle East.
He wants his Nobel Prize.
He wants his Nobel Prize, and he sees what he's done with Iran, with the bombing of the nuclear facilities, as something that will actually achieve peace in the region
it's like
in the long run.
Tariff policy, escalate to de-escalate.
That's how he sees it. And there are many people that say he's right, or will prove to be right. It will take some time to find out for sure. So I think he would definitely like to see something akin to a peace treaty between Syria and Israel. Trump obviously met Syria's new leader, Ahmed al-Shara, in Saudi Arabia in May. Initially, that shocked Israel, and they've been essentially saying that the government in Syria is headed by terrorists, or at least former terrorists, with people who used to have links to Al-Qaeda, but they are starting to change their tune in Israel. And I think, on the whole, if Israel can get something out of negotiations with Syria that leads to a peace deal and effectively destabilizes the border, the Israel-Syria border, that's something Israel would take and would be happy with.
Okay. Thank you so much for that update. Bloomberg's managing editor for economics and government here in the Middle East and Africa, Paul Wallace. Now, let's just check in on oil because, of course, as Paul says, the geopolitical risk is somewhat dissipating. We seem to be moving into a chapter of diplomacy. And in terms of your oil market, we have oil back near where it was before Israel attacked Iran on the 13th of June. We're at $66 a barrel on Brent, weaker 0.5%. And focus now returning to OPEC Plus, a potential supply hike on Sunday. And traders also minding the progress on trade talks. So Brent on the back foot for a second day, but we'll keep an eye on that. Now, in a moment, more diplomacy. As Kenyan President William Ruto heads to meetings in Europe, we're going to dive into the challenges that he faces back home. That's next on Horizons. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. Now to Africa. Kenyan President William Ruto is actually doing the rounds in Europe. He's in Spain attending the 4th International Conference for Financing for Development. And then he's going to travel on to the UK to meet with Prime Minister Keir Starmer. For more, let's speak to our Chief Africa correspondent, Jennifer Zabasaja. Jen, good morning. Just tell us what's on the agenda for Ruto's trips across Spain and the UK, where you are now.
Right, Lizzie, if we take a look at what President Ruto was doing on Monday, there was quite a bit of bilateral meetings that he had. A number of them were European leaders from across the board. He met with Ukrainian Prime Minister. He also met with the President of Spain, the King and Queen of Spain. He met with Germany's economic minister. And really what he is trying to convey, at least to the international community and also potentially to his constituents at home, is that he is committed to doubling down on some of the commitments that he made early on in his presidency to boost investments, prioritize investments, create jobs, and also continuing to double down on Kenya's global competitiveness in trade, climate, technology, and security. That coming directly from the Kenyan administration. Now, it has been years since Kenyan President William Ruto has been on the global stage touting his own preference and his own, real admiration of what he says is a prioritization for the global community to invest in the African continent. And so years ago, he really was sort of a darling for the international community to be sort of a voice in this effort. The only issue, though, is that he is, of course, facing a number of concerns and really condemnation back at home for his lack of following through on a number of commitments that he made during the campaign when he was running to become president, and then eventually when he did become president. And so you have to wonder whether or not he is making some of these pronouncements because he really does need to find some partnerships and kind of score a win at a time when he's really facing a lot of difficulties back at home.
Well, yeah, given that long gap since his last international trips, how much does he need to find international partners at this moment?
If you take a look at some of the pictures that we have been seeing from Kenya, you would probably be one to say he really does need these partners, and he really does need to find a way to convince at least people who are sitting in Kenya, but also investors who for many years had seen Kenya as one of those economies in East Africa, as one of the most one of the economies that were growing quite fast. Convince them that he is the right person to lead this economy. He's, after you were mentioning in the intro there, from Spain, he's going to be coming here to the UK, going to be recommitting some of these investments with Keir Starmer, recommitting the UK and Kenya to some of these prior investments that they had, potentially looking to expand investments into Nairobi. But those pictures that we were just seeing there, the generation coming up were just a few weeks ago chanting Ruto must go. And so many people just feel like potentially he is not the right person to lead this country at this point in time. Not least, Kenya is going through some economic turmoil. They had to abandon their IMF program earlier this year. They haven't yet been able to find a budget that is agreed upon by their parliament, and also one that can at least get them to a point of economic stability. And so many people are watching and waiting for this administration to really get back on a path to stability and be the economy in the country that many people were hoping Kenya would be.
OK, Jennifer Sabasajah, our chief Africa correspondent in London, ahead of that visit. We thank you so much for the update. Next up, we'll get back to the Middle East. This is Horizons, and this is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Doing deals as Donald Trump's July 9th tariff deadline ticks closer. The EU is now reportedly willing to accept his 10% universal levy. But the US president is threatening to impose a fresh tariff level on Japan over rice exports. Washington-bound Israeli Prime Minister Benjamin Netanyahu is expected to meet with Donald Trump next week as the US continues to press for an end to the war in Gaza. And Trump signs an executive order terminating US sanctions on Syria, a move that could unlock investments in a country reeling from 13 years of civil war. It's just gone 8:30 a.m. across the Emirates. I'm Lizzie Burden in Dubai, in for Jomana Basechi. Welcome to the programme. Welcome to July. We are in the third quarter, of course, now. But just looking back on yesterday's performance, you had the S&P again hitting a fresh record. In fact, it was the best quarter since December 2023. agree. But if you look at the futures picture this morning, we're pretty flat on both sides of the Atlantic, bearing in mind, of course, that it is a shortened week because, of course, it's Independence Day on Friday, so US markets will be on holiday. These are therefore pretty thin volumes, as you might expect. But flip the board over to the cross-asset picture. And speaking of that holiday, we're going to get the jobs report a day earlier on Thursday, and that could be potentially another catalyst for the bond market. You've got the 10-year yield at 4.20 as we speak. Oil is at $66 a barrel now that the geopolitical tensions, as we've been discussing, are somewhat dissipating here in the Middle East, and the focus for traders therefore turns to that OPEC Plus meeting on Sunday and the potential for another supply hike. If you get yields dropping, by the way, you could see benefit for gold, and we're on a second straight day of gains for the yellow metal. And then we've got euro dollar here at a 117 handle as we look ahead to that Eurozone CPI report at 10 a.m. London time. We're going to get a preview of that with Valerie Teitel later in the programme, but I just want to reflect on the dollar's performance in the first half of the year. That first half was its worst plunge on record, as you can see here, by a country mile, you might say. And the question is that going to get even worse in the second half as these bets on Fed cuts ramp up? But let's get over to Avril Hong now. She's on standby for us in Singapore with an update on Asia markets. Avril, we've seen euro yuan at its highest since 2014. Do you think that's going to translate to gains for Chinese equities?
Well, that's the thesis from MLive's Mark Cranfield. This chart is from him. And we've been trying to figure out, right, what some of these currency moves are going to mean for equities. So one dynamic to highlight. If you think about how the dollar has slumped, we've seen yuan, meaning renminbi, strength, signals from the PBOC as well via the yuan fix of late. And that demonstration of confidence that to them, the dollar is going to be continuing on this weakening trajectory. But you can't say the same for the yuan against the euro. It's actually been weakening against the euro to the weakest level since 2014. And his point is that back then, it kind of foreshadowed the gains in mainland stocks, the CSI 300 that you see in this line in blue. And for now, we could see the same because the yuan weakness could contribute to the competitiveness of the products from Chinese exporters and be helpful for their earnings outlook. That could be supportive for Chinese stocks as well. So interesting to keep watch on this potential trend emerging, a sort of dynamic as we unpack some of these currency moves and what they mean for stocks. Lizzie.
Avril Hong in Singapore, we thank you for that update on Asia markets. Let's get back to the Middle East, though, now. President Trump has signed this executive order terminating US sanctions on Syria. And it's part of an effort to boost the nation's struggling economy and support the new government after rebels overthrew President Bashar al-Assad last year. Joining us now for analysis is Dalia Fahmy, who is Director of International Relations and Diplomacy at Long Island University. Thank you so much for making time for us this morning. It's really good to have you with us on the programme. Do you actually think that Israel will manage to forge formal relations with Syria, given all of this?
So it's interesting. The lifting of sanctions is really about two objectives that President Trump's been discussing since the surprise announcement Monday, but the executive order of yesterday. The first is a political one. It's really about how do we forge a new relationship in a country that's been riddled with sanctions because of not just the Assad regime, but of 13 years of civil war. And so you see this as an opportunity to enable foreign business in the so-called rebuilding of Syrian sectors such as construction, energy, and trade. But really, it's also about including Syria's neighbors in this project who for a very long time have been outside and unable to participate in something they anticipate very quickly being involved in, which is the rebuilding of Syria, the stabilizing of Syria, which for them has been a source of instability and refugee crisis. In terms of what this means for Israel, the prime minister is coming here to the United States, and for him, it's a mixed bag because while he does want relations with Syria, the fact that President Trump has lifted the sanctions unilaterally without conditions is actually quite, is not what the Prime Minister of Israel wants. And so when he does come here to D.C. to meet with the president, it's going to be about what then leverage does the United States have vis-a-vis its relationship between Syria and Israel because all the sanctions have been lifted.
Well, yeah, do you think that the US removing sanctions on Syria paves the way for Syria joining the Abraham Accords?
Not necessarily. Normalization is not yet on the table. It could lay the groundwork. We could start seeing efforts in that regard, but you have to remember when, just in December, when Assad was overthrown, Israel's response was that waves of airstrikes that systematically destroyed much of Syria's air force, its navy, its defense, its missile systems. And they also took over that territory between the two countries, creating a strategic buffer, creating for itself a place to leverage. And so in order for the Abraham Accords or even diplomacy to move in that direction, there would have to be a major diplomatic achievement and resettlement between how Israel sees its relationship with Syria and how Syria sees its relationship with Israel. And so President Trump removing its leverage position in terms of lifting all sanctions puts Israel in a precarious situation of what does our ally, the United States, have to play, but also seems to be an embrace that President Trump is having of the current Syrian leadership and regime, and perhaps moving the country's development in a different direction. What this means for normalization, while there are backdoor channels, we know that Israel uses at least 4 different backdoor channels to speak to the Syrian regime. What this means in terms of its short and long-term relationship with Syria is going to be determined by how Israel's relationship with that border territory continues or not.
Well, yeah, is peace with Syria realistic when you've got Israel's foreign minister saying that Israel plans to keep the Golan Heights, which, of course, Israel captured from Syria in the 1967 Six-Day War?
And expanded beyond that since December. You know, when we talk about what this really means in terms of the relationship, it's quite telling that there has been a lack of response on the Syrian side towards Israel, even though there's been this heavy-handed bombardment. It could be that the current Syrian leadership is creating a position of distancing itself from Israel, negotiating through the United States, and seeing where the cards fall by not responding to what Israel has been doing. And so, yes, the Golan Heights, the expansion of the territory seized by Israel since December, but also in terms of what happens to Palestinians over time that have sought refuge in Syria in terms of their return to the Palestinian territories. These are all up for negotiation, but I think in the short term, what the Trump administration is trying to impose is the lifting of sanctions creates business opportunities. And in the language that Trump enjoys of business opportunities, it is, can the reconstruction of Syria lead to the development of economic ties and business successes for U.S. companies, U.S.-based companies, regional-based companies throughout the rest of the Arab world, and also in terms of Israel's relationship with Syria in the future?
Yeah, hundreds of thousands of Palestinians living in Syria. It's not just a business story, as you say, it's a human story as well. But, you know, we have to ask the question, to what extent does Syria pose a threat to Israel? Its president fought US troops in Iraq, used to be an al-Qaeda militant. Is that still a real threat?
You know, militarily, absolutely not. Israel has, since December, really decimated much of its armed forces. In terms of this embrace of this leader who was formerly on, you know, the kind of terrorist wanted list of the international community, but also as a member or in close proximity to al-Qaeda, the fact that he's being embraced not just by many Western countries, but also by the United States, could perhaps signal that there is a accountability that we placed on the Syrian regime, not just for terrorism, curtailing terrorism and terror narratives within its borders, but even beyond that. So it could be that this is signaling a new kind of entryway into the so-called global war on terror. But this embrace of this individual is also reflective of, for example, what happened when the Taliban handover was facilitated through the U.S. administration in Afghanistan, where those who were once perceived as the enemy of the United States became the kind of shaking hands individuals that we saw, for example, between the Syrian leader and President Trump, but also between the former Secretary of State and the leaders of the Taliban. And so politics is an interesting way with which we make, different kinds of bedfellows. But I think in this current moment, in terms of what threat does Syria pose towards Israel, it really has been decapitated in terms of its military strategy and might, in terms of its political force, and in terms of even how can the leader of the country really impose his power on throughout the rest of the country. Right now it's concentrated in Damascus and it's kind of near proximity. Engaging on a border dispute with Israel is really beyond his capacity right now. And so I think this is why he has yet to respond or engage on that front.
Dalia, it's so great to have you with us on the programme. Thank you so much for staying up late for us. Dalia Fahmy, Director of International Relations and Diplomacy at Long Island University. Thank you. Now, coming up, we are going to look into other regions, but I just want to bring you the latest elsewhere here in the Middle East. Saudi Arabia's sovereign wealth fund has seen its income from investment activities rise for a second straight year. The 38% year-on-year boost in 2024 was driven by dividends and asset sales, but net profit fell by more than half to about $7 billion. That's as high interest rates, inflation and impairments on select projects hurt the bottom line. The results underscore a growing tension. While the PIF is extracting more from its investments, it is likely to face mounting pressure as it drives the Crown Prince's ambitious economic diversification plan. And to Turkey, where markets surged after a court delayed a ruling on a high-stakes case that could unseat the main opposition leader. The lira, equities and government bonds all rallied on signs that the immediate threat of deeper turmoil has been pushed back. The case centres on allegations of irregularities in the 2023 convention that elected Özgür Özel as chairman of the Republican People's Party. The next hearing will be held on September the 8th. And out just now, the news that Turkish police have detained former mayor of Izmir, who is also part of the Republican People's Party. That news just breaking. But coming up, something cool. We're going to talk M&A in the world of air conditioning with the CEO of Tabreed. That's next on Horizons. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in Dubai. It's 8:45 a.m. here, and I want to turn to something that's a necessity for everybody in the region in these especially scorching temperatures: air conditioning. Abu Dhabi-based firm Tabreed has just acquired local firm PAL Cooling in a joint venture with CVC DIF. The deal, worth around $1 billion, will expand Tabreed's portfolio and capabilities as the real estate sector in Abu Dhabi continues to grow. And I'm pleased to say, joining us now is the CEO of Tabreed, Khalid Al Marzooqi. Thank you so much for making time for us this morning. Congratulations on the deal. Just talk us through how actually you managed to get to this point. What was the rationale for this acquisition?
Thank you, Lizzie, and thank you for having me on Bloomberg. Well, this deal is very transformational for the company and highly strategic for us. It will cement our presence here in Abu Dhabi and UAE in general as one of the global leaders in district cooling. PAL is a iconic, basically district cooling scheme, which has a concession, 8 concessions, about 3 plants. Total concession, as we calculated in our industry by refrigerant tons, we refer to them as RT, up to 600,000 tons. Currently, about 182,000 tons are connected to them. So, in a way, yes, it's very strategic for us. It's highly value accretive for our shareholders as well, and of course, on the joint venture between us and CVC DIF.
Well, how did you partner with CVC on this deal? Are there plans to work together on other transactions, for example?
That might be the case as well, but we looked at a lot of investors. So CVC are very strong when it comes to infrastructure investors. They almost run about 81 billion dirhams worth of assets for pension funds and other infrastructure investments. So we see them as a very strong. I mean, we had a bunch of them that we kind of filtered out, and they came out to be the strongest and the best partners in our JV. And we were right. It worked out pretty well. And we were able to close the deal very fast with almost agreement on most of the terms and conditions as far as our shareholders' agreement is concerned.
Well, you're teasing us now. You say there might be more partnerships. Where might they be?
Well, they might be if I'm not out of pocket, but hopefully that there's got to be something coming because, I mean, it's in this area, I mean, Tabreed has had quite a significant year. I mean, we've announced our acquisition for Palm Jebel Ali, which is almost 2.5 times larger than Palm Jumeirah. And we added basically the Reem Island or the concession of Pal, and we have our eyes on some upcoming business that might be coming in Dubai, namely the new Maktoum Airport. And so, yeah, we're punching above our weight here and looking forward for the future.
I mean, roughly $1 billion for this deal is a decent-sized ticket. What's your kind of budget for future acquisitions?
Well, the gist of this thing is to keep our investment grade, and this was one of the major, basically, drivers for us to partner up with the likes of CVC. It will allow us to pursue new acquisition as well, as long as our investment grade is kept solid. We will be funding it, part of it as from our cash reserves and company debt. But as I said, it will unlock our the potential for new acquisitions. So, as I said, we're deep-pocketed, and I think if the opportunity arises and we see it's value accretive to our shareholders, for sure we're going to pursue it.
Just stepping back, I'd love to just get your view on how the residential and business market's holding up in the light of all of the recent geopolitical turmoil.
Well, if we take a look back, let's say, we'll take PAL as an example. For the last 3 years, their EBITDA has increased on the range of about 9% CAGR per year. So we look forward as well that they will maintain that 9%. And I'm just giving a sample of what is realistic. So we're looking at the PAL acquisition. And I believe the same thing will continue on. The speed might differ from time to time, but the projection is going to be the same. We take the Dubai real estate market; it's been on the boom, despite all the rumors going on. It's a bubble, and it's going to wind down, but it wouldn't. It might slow down, but it's keeping the upwards trajectory. And the same thing is going on for Abu Dhabi as well.
But what is the biggest challenge to growth ahead, in your view? Is it Trump's tariffs? Is it falling oil prices? Is it the geopolitics?
Well, whatever drives the real estate or hinders the real estate development will hinder our business as well, because we are a utility company. So district cooling, basically, you provide chilled water and you convert that into climatized environment for your air conditioning, let's say, but it's cheaper. It's easier for people to understand. So anything that hinders the growth of the real estate basically sets us back as well. But if the real estate market keeps on going, and when we say real estate, the concentrated real estate, like a large campus, I'm talking about large buildings, malls, universities, hospitals, what have you.
Yeah. Well, it's really great to get you on the programme. On the back of that deal, Khalid Al Marzooqi, CEO of Tabreed, thank you so much for your time this morning. Coming up on the programme, as central bank chiefs prepare to appear side by side on stage at Sintra, we're going to go through what's on the economic calendar for today. That's next on Horizons. This is Bloomberg. Now, it's a shorter week for markets, but it's still a busy one. Our markets reporter Valerie Teitel joins me now with a preview of what's on the docket. Hey, Val, we're going to get the latest Eurozone CPI data for June in a few hours. Are we going to see much impact from here, the Middle East geopolitics?
Lizzie, I think a lot of the focus will actually be more on the foreign exchange impact on CPI, with Eurodollar breaking 118 overnight. The possible disinflationary force into European inflation is something that the market is watching, especially after yesterday. The German inflation print came in cooler than expected. Maybe that's teeing us up for a cooler CPI print today. But the real highlight in Europe today is what's going to be going on at the ECB's forum in Sintra, Portugal. At 2:30 p.m. local time, we get this key panel with all the major central bankers sitting side by side, moderated by our own Francine Lacqua. This one's going to be a very interesting one, Lizzie. Sometimes this panel really opens us up to see the more personal side of these stoic central bankers. Last year, it was BOJ Governor Kazuo Ueda keeping everybody laughing, showing his comedic side, making jokes about Japanese monetary policy. But with that panel taking place at 2:30 p.m. Local time today, might be a key focus for the markets.
Yeah, we'll definitely be watching for that. We're also looking ahead to the US jobs report, of course, on Thursday. More data today. Is there going to be potentially more gains for treasuries?
Treasuries are on quite a winning streak, a 3-week winning streak, in fact. But we do get some hints on the U.S. labor force today. We do get the JOLTS job openings data. This is all coming ahead of the key piece of data released on Thursday. That's the non-farm payroll report. All these questions about what kind of payroll number will tempt the market to price in a sooner than expected rate cut, maybe tempting in a July rate cut from the Federal Reserve. The current consensus is for 110K, Lizzie. But we also get today U.S. ISM manufacturing. Tomorrow we also get ADP employment. So it is a busy week, a shortened week, but a lot of hints on the labor market to come.
All right, Valerie Teitel, our markets reporter out of London, we thank you. And you can watch full coverage of that ECB forum in Sintra with key interviews throughout the day. You're not going to want to miss Francine's panel. But that does it for Horizons Middle East and Africa. I've been Lizzie Burden in Dubai. Tom McKenzie on Daybreak Europe will take it from here. This is Bloomberg.